Greetings, market rebels. Welcome to this week's macro measure combined with our sector situation video. Let's get into our trusty disclaimer from Market Rebellion, which should be right there. And here is our trusty intellectual property rights notice. And then I'm going to flash our last week's basic slide. Leave it up there. Got a couple highlights. The We had the expect volatility. We had a relief rally we thought would be the most likely scenario. How high we can lift, and that's if we can lift. Quick coverage on that. That was very short. They tried that early on in the week and early on Monday, and it just boom, it was over. So hit the SMAs we discussed, and that was it. No further attempt until later on in the week. So they did have a couple after that, but it was already after we had dropped significantly further. I think maybe these other green highlights are just worth a quick mention. Just still thinking that this is the problem, a problem, a large part of the problem, the disruption type stuff. Um, and then just reminding that we try to keep the focus on these because this is what happens from time to time. You get these corrective phases, and a lot of them are news driven or assisted by news. And then you get these significant pullbacks, and we've had a lot of those, and even some really big names. Not all, but many large names have had really significant pullbacks, and so a lot of folks own those, and so that's why I always go back to knowing what you can do defensively in front of these things. So we tried to do what we could that way. Hopefully, some folks dove into the collar and other strategies with Bill and Stu and maybe Scott or Ryan or Greg or someone during this past week because you really want to have that in your bag of tricks. Anyway, here is this week's slide with there's a few carryovers and then there's also a few new items. So last week we got real intensification. We became oversold nearly everywhere. I would say the market later in the week before Friday's fun, where they tried to reverse things, you got bombed out. I mean, you were oversold virtually everywhere. And so I think the relief rally attempts underway again. I would say again, the CNN, again, the imperfect measures, CNN, fear, greed, AAII, they're still very favorable for a relief rally attempt, right? We really have to at least call it an attempt. I still think, right, the market's a mess. Leadership's pretty much lost at this point. The VIX is still elevated, but the VIX could not bust through to the next sort of tranche where usually when you get through the mid 25, I've got a line near 25 on there. When you get through there, you usually can see it pop to 30, 35, but that didn't really happen. It tried and tried and tried, but it couldn't do it. And that, of course, coincided with the 200 SMA games that were being played in the spies and Qs. Um, Yields, in fact, which were cratering, they bounced during the week. So it's possible, right, that some money moved out of that safe area and moved into equities, right, thinking they're getting some better deals to rotate some money that way, essentially, right, and get in dollar cost average, if you will, from much lower levels than maybe they were recently buying from. Interestingly, too, the dollar was just had a really rough week, one of the roughest weeks it's had in a while last week. I mean, every session was kind of rough on the dollar. Um, let's see. So the intermediate term trend is definitely still at risk. We'll have to do the charting at real time again. I'm still really pressed for time and just doing the best I can. Wanted to do this on Friday, so it gets out a little bit earlier, but just wasn't in the cards. I've had another round of problems with my computer. Had to work on the laptop for much of last week, which is, I can't say impossible, but it's just very difficult. Anyway, I would say you have to, despite expecting there to be a news neutral assumption, most likely scenario, I do still think you've got to be at an elevated DEFCON because of the news ticker, right? What can happen with someone like Trump, in this case, Trump. So I would say expect volatility to continue. To be careful out there, Esterhaus warning. You still have to have that in effect. You just don't know what can drop at any time. You've got to be smart, and that just means to me, being smart just means don't think about it, just do it, which is kind of like the opposite of you would think. But if you just say, look, this has been a good move. I've got some real good stuff that build up here, profits wise. I still think it looks horrible or great one way or the other, depending on which way we're moving. But I'm going to do something because I've got a chance to do something here. I'm going to lock in some profits by trimming a little bit, maybe rolling a little bit, one or the other, or both, right? So uh, there's a lot of things you can do. So I would just say the more you do that when you've got some good money in the kitty during volatile phases, that's been what's worked for me, right? When I didn't overthink it, didn't get too slick, maybe I've always done better in volatile phases, not waiting for the ultimate crash or bounce to happen and just trading that, hey, this has been a really big move from a volatility perspective. As a result, my profits have built up and I'm going to take a large share of them here, not necessarily leave the trade because of the roll factor, but just to say, look, it's not worth, there's too much money here that I've made in such short order. I don't want to have that 100% at risk on the table because you just do not know what news is lurking. There could be a news story that's assists you. There could be a news story that's averse to what you would like to see happen. So that's why I would say when you're in volatile phases, you just have to embrace the fact that it is volatile. You don't know what's coming next for sure, and just do exactly what I said. Now, you got to look at it through your own lens, but I'm just trying to convey something that's helped me many times, many times over the years. So anyway, there you go on that. Again, I think you have to be, I just explain that you have to trade more deftly. The politics aside, again, it's not a Trump pro or con. He just appears to be ostensibly disruptor. And again, market is not typically a fan of this. And the way that he's sort of breaking the mold on certain things, or so it seems. The mold is what they're all comfortable with, and that's maybe what the market was. The rally was maybe predicated on Trump not breaking the mold so much, but just maybe supposedly being more business friendly, right? All these types of things, consumer friendly, blah blah blah. Well, maybe it's not at least turning out that way at the very start, right? There could be this sort of period of turmoil, and then you get somewhere down the road. Who knows? But that's what it seems like it's shaping up to be in terms of the consensus opinions out there. So take that for whatever it's worth, but that's typically not a great thing for the market. So I do think that we're going to have to expect more. I still think that there is potential for dramatic events. I've been way too early and wrong about that. I'm surprised about that, to be honest, very surprised. But and I'm not hoping for it. I'm just saying that I really think there's potential for that. So just the way that things are these days, I guess I discount the Pennsylvania incident and other incidents um, because it almost seems like it should be a big deal, but it's almost like it's not a big deal in the way that people move through life these days, uh, especially like the Wall Street crowd. Anyway, I would say the off-camera data remains concerning. Don't even want to go into it. So I mean, that's another reason why I expect this to persist. My most likely scenario, assuming news neutrality, right, is we have another relief rally attempt again because last week's was feeble, fleeting. The rate of drop of this market, kind of like how quickly it fell apart to the extent that it did, I think that's concerning. That tells me um, that basically, right, a lot of people decided to bail and a lot of people decided not to buy, right? And so that's telling me that essentially, right, buyers backing off, sellers stepping up, and there really wasn't that typical fight all the way down. There was a couple little attempts here or there, but it fell pretty rapidly. And so to me, that's a little bit of at the very least, a little bit of a source of concern. I don't think that's encouraging how quickly we fell. But on the flip side of that, when you do get quick drops, and you can usually get quick relief rallies that of a significant magnitude, right? So that could be good for trading. I just don't know if it's good for a long term, that a market that thought it had everything figured out is now suddenly repricing things down 10% without really much of an uptick along the way. Just kind of exaggerate, but I think the point is made. Anyway, I still think the firms are now more likely to want to mark things up and distribute that inventory to the usual suspects that show up after a phase like this. So my argument would be that there's been a lot of selling, that they've had to, some of these market making operations or what have you, firms have had to absorb. They got it down to key levels, and they played some games near the 200 in the spiders. They played games in the Qs, and now they're trying to really hold and go, I think, if they can. And I think it makes a lot of sense, because even if they think that things have really shifted, and they may, I don't know, of course, that they have, but if they really believe things have shifted kind of in the intermediate term, and it's not going to be a great economy here for a little while at the very least, they may want to let this market breathe, get a bounce, and then offload a lot of what they had to absorb, of course, at higher prices, and then kind of get ready for maybe another leg lower. Don't want to jump to that conclusion, just kind of stating that. And I would say there were some, 200 SMA flushings where they brought a lot of things, including large stocks, down. They brought probably new shorts in. They probably forced capitulation among some longs that were really worried, did the old false breakdown maneuver, which is essentially, right, a bear trap, and then they started to reverse things. So they got some gap closures in there. They left some reversal candles, and there's been an uptick in breadth. So that's why I'm going with what I'm going with. And on that note, I think I'm going to stop the recording. I'm sorry, stop the sharing, excuse me, and then we're going to move into the charts, because I've got to do it more of a real time thing here to get us back to get us going, because I'm just, again, really pressed for time. So just bear with me, and then let's hope that we get this to work for us. I'll start out. I think I took away a lot of lines, so let me get back to this share on number three, screen number three, and that should do it. So here we are. I'm starting out. I kind of cleaned things up for us to a degree, and here's where we are in the SPY on the daily. And as you all know, right, we had that feeble breakout attempt, which looked like it was uh, things looked like they were ready to go. Very common. I think we try to warn about these literally every time I try to warn about something like that. You've got to be on guard for possible reversals. And I always try to make the cases. This is why the discipline of saying, yeah, I'm going to go with the breakout attempt, because you just don't know for sure if it's going to work or not. You might even doubt it, but you could be wrong, and you want to try to profit from it potentially. But you got to be really careful when they kind of pull the rug on that and start reversing it. The sooner you realize that's happening and you get out or neutralize your risk, or at least hedge it to some extent, better off you are. And that's because there's often, right, these often false breakouts, strong reversals the other way. So if you don't do that, they sort of take no prisoners, no mercy, and they just really clean your clock and you're done. Your options probably expire worthless if you don't do anything. That's why you have to be careful here right now, I think, because this is a very obvious area up here where they made it look like you may start breaking out, and things look kind of interesting that they could. And then, right, we know what the aftermath now, and the same thing here, right? This looks really bad. You're open below the 200 there, which is this purple line, and then you dip significantly from there. But by the end of the day, right, look what they did. Not only have they got it back above the open, not only is it back above the 200, but you're closing really in the top. You're probably in the 80th percentile, roughly speaking, on your close of that candle's height, if you will. So that's a really strong reversal. I do think, as I said, with things having gotten bombed out, that does make sense to try to reverse naturally, right? Just like the SMAs work as support, as you're moving higher, we will have the issue of the 150 is right here in rust, not too far above. You've got the declining 10 leading the way because that's the shortest SMA that I work with. That'll be coming into the picture. This additional resistance line that I've added here for us will be coming into the picture. So to me, I think I can even add a flat line, and this is what I try to do in terms of confluence, try to find areas where there's just a lot of things that suggest that it's probably a key level in terms of your uh, key factors, right? All sort of bunching up, if you will, to put it inelegantly, right near a certain level, right? And that's going to be right now about 585, 586. So you can expect, I think, another couple of percent and just them exceeding it a little bit, something I would factor in, right? It's not like it absolutely has to stop it in its tracks. It could, but they're very good at just going a little bit through a lot of these forms of resistance in this case, and then reversing it, right? So we'll see, but that's what I would expect them to at least try to do. Now, if they can't, because there's news, then naturally, like I wouldn't come in at 929 and keep my most likely scenario news neutral assumption as my expectation, right? Because news has impacted it, right? I'm saying if we don't really have any startling news, it's kind of like par for the course over the weekend, Monday morning news. I think you probably still get a rally attempt, and then as many longtime listeners know, when we do this basic nuts and bolts charting, we just go from there, right? So if they're able to take this past here, then I think the next level up is going to be where a lot of these that include even the declining 50 now, but the 15, 20, 100, they're all going to put you at about 594-ish, 595, somewhere in there. So I know that's kind of boring, right? 585, 586, 594, 595, these round numbers sort of, but that's where it shapes up. And I would expect that to run into trouble there. And then finally, what we'll do is we'll add in a fib here and we'll get the retracement going in terms of are there retracement levels that kind of show up along with those? And I'm going to have to do this and then just going to have to make an adjustment to it because I don't think it got the third 613.23 at the top perfectly, and nor do I think it got the, let's see, 565.63. Pretty close, but not close enough. So this way we can be pretty accurate with it. And so I don't really see anything close to here. It looks like you're at 584 for the 38.2. If we bounce 38.2% from of this entire, let's say, range high to low so far. Um, but this one here at the 61.8, that's getting there, right? That's pretty close right there. So that's another reason I would say to expect that sort of neck to be your next level, as it turns out. So that is that. Now, what I'm going to do here is I'm going to give us a little bit longer term perspective. I think it might be important to take that now to show a couple of different things, and that is that, right, this isn't the end of the world yet. You've gotten all the way down here though to the 50-week moving average there in gold, right? So you've gotten down to that. So that's kind of a big, right? That's kind of a big thing. We haven't visited that in a while. Let's go back to the last time we were near there, and that is about a year and a half ago, almost, right? So you haven't been there in a while. We had that. This is really, I think, when things launched, and you've been in this sort of continuous phase really ever since. So I don't want to add more fibs and really get this messier than it already is, but you can see that this hasn't really been that bad yet. You did find support right near where you would expect if you believe in these SMAs, even on weeklies. There is sort of a little bit of a flat line that I think from the prior hesitation near there, you can see these highs and all these candles have some sort of a price factor that is right near there, right? And I always say to cheat a little bit in front of those, as you know, because of this reason that A lot of times it doesn't touch it to perfection. It stops in front of it, and the gang does the gang thing. But this weekly chart just shows you that, again, it hasn't been horrendous yet. It could get a lot worse, right? So it's the dual edge. If you do start getting worse, there's definitely some room there, right? From what we've been, how far we've really ran. I mean, how much we've ran up and how far we can fall, and so it can happen. And it's been a while since we had really this type of protracted corrective phase, larger correction, bear market type activity. It would be a little surprising, I think, historically to I guess it really depends on when you want to say the bull market began. If you're of the opinion that the bull market came when they threw $11 trillion worth of goodies into the economy with the scamdemic, then I guess that's one thing. If you want to say that no, really after that blew off, that's when the economy maybe normalized to an extent, and then it's been chugging since then. So that would be very surprising to get really a bear market after really you're just a little bit more than let's say 2.5 years into a new bull, if you want to call it that, from when you really started off this low. Not even quite that much, but it's close. So that would be atypical, right? In my experience, it would be atypical, I think, for the prior centuries worth of data, but I guess you can't say that it can't happen, right? Anything can happen in theory, just not something you'd expect. But is it different this time in the sense that you don't have somebody who is ostensibly leading the country, and of course having large impact on many things potentially, that is going to do the same old. And that I would say ostensibly he's not supposed to be doing the same old. So that's maybe why things might not act the way they typically do. We'll see. Maybe they still will. And there's a lot of things that you could say, well, it's different this time, and it might really not be. We'll see. Only time will really tell that answer. But these are just thinking out loud type things. So that's where I think this goes back to. It's a very similar story. If we continue lower, right, that's probably something we should mention before we get off this. But if we continue lower, I think you're probably just better off looking at more of a weekly look. And I think probably. I think really this thing can go pretty low. I think this thing can really go, the spiders can really go down another 100 points in my book, down to like 475, something like that. That's what I would kind of put a number at, from having done other things, but it's just too much time. It'll take too much time to go into that. So I think your shorter term targets are if this whole area cracks, you probably start to get worried if you get beneath 540. But I think if this whole area cracks, I would use 540 as the next level down between these weekly SMAs. So that's another what say rounded off to six, that would be 35. So that would be about another 5% and change maybe below last week's low if we do fall even further. And then the next level down from there, unfortunately, has to be your 100 SMA on the weekly, which is near 509. But I would say 540-ish. And then I'm going to say again that 100 for now, just using basic technical analysis, not overlaying fib after fib after fib. It'll just get really messy. So I'm throwing some basic numbers out there. But yeah, I think these are pretty good numbers. There's actually hate to say this, but there's actually a bunch of gaps that you can probably find, and this would be one of them right here. And I'm going to even note that. And the reason why I talk about, if you notice, I don't really talk about gaps that frequently. It's not a weekly discussion. I only really start worrying about them once you've seen a gap not close after about 5 sessions from when the gap occurred. I don't really pay that much attention to it anymore until the price action is heading back in the direction of the gap where the gap was left. Then I started paying more attention to it. So I haven't let this gap concern me for a very long time, right? Probably right around in here. But now that we have what's happening here with this double top, some call it a triple top, and then possible break, this kind of swift breakdown to this degree, and all the other stuff that's associated with the current sort of Trump situation overall. This to me is the kind of thing that could turn into a problem. And it could turn into a bigger problem, I think, than maybe a lot of dip buyers would give it credit for. And again, I'm not predicting that. I'm just saying I think it could. So that's when I start even just sort of long range thinking about gaps that people think will never be filled. Because it's been my experience that gaps like this that people forgot about do get filled when they've been forgotten about and it's been a long while and you have these types of disruptive scenarios in place and then things tend to just get overdone. And I had a guy that I was friends with a long time ago. I told the story before. Long story short, he was not really a big believer in charts, did his trading a different way. And he asked me where he thought I thought Nortel Networks could go to. And I told him I thought it could be a single digit stock. It was trading somewhere near, I don't even remember at the time. It was, I want to say anywhere between 40 to 60. And he hung up on me, basically said, "Oh, you're crazy," because I think he was long. And I'm like, "Well, you asked me to look at it. I did. What do you want me to tell you? That's what I think." And he called me back a while later and apologized because the stock fell to double digit. I mean, sorry, single digits. And it just, when you get these risk off scenarios and these bear markets, just like people chase stocks too high during bull markets and it gets excessive during bear markets as well the other way. And that's just been my experience. I don't think that's any revelation. It just maybe bears repeating, worth watching, worth reiterating, whatever you want to say. So anyway, the Qs, it's a very similar situation. These are our two biggies, obviously. Um, and you could see they started the reversal. They didn't get it far enough along. They're going to run into this resistance line, which is just right near the 150 there in gold, and the 10 is coming in rapidly. The declining 10 is right there as well. So that 500 level kind of bunches up to be the area. So you're up another slightly under 2% that you would hit there. The next level up that they would bounce to, I think, would be when all these rotate down towards the 100. So that's going to be another 2% from there, maybe a little bit more. Let's call it 513. We'll put that number on it for now. So I think you're looking at 500, 513 on a bounce. It's probably worth getting this fib on here so we see if there's any dovetailing from the we have to go from, I think, here. I keep flipping back and forth between Trading View and Thinkorswim, and I always hesitate. I feel like, so we have to get 540.81 on the high, and we need to get on the low, we need to get 480.53. And then this, we'll see what dovetails where. So yeah, so I guess you're not near five. I don't think you're near 500 with anything, much like the SPY. So if you're going to get any dovetailing, it's probably going to be more. This one's only about 2 points away from our 100, right? So I would say that might be the more relevant one on a retracement. So if there's going to be this bounce that I think would occur, again, I think this type of a bounce that we're looking at a couple percent back up, maybe a little more, probably happens 70% of the time, probably. But is it different this time? That's why the market's always a challenge because you even can't trade something with a 70-30 confidence, let's say, ratio super aggressively without risk management. You still have to do the same things, I think, to try to capitalize on this if you think it's coming, start to see it developing. So we'll see. But otherwise, right, if you look at the bigger picture, again, we will look at that now, and I think you're going to see that, this is not the end of the world yet, but a pretty sharp drop. Again, for me, kind of a double top. Some people are calling it a triple top. Either way, it's not good. It doesn't really matter. I think double tops and double bottoms is some of the most basic, but and frequently appearing and relatively reliable if you add TA, and your TA includes looking at the market environment as well. Um, I think those are good patterns, as simple as they are, to keep your eye on. But yeah, I mean, I think, look, the next level down is going to be somewhat similar. I think you're looking at, in the Qs, probably, let's just call it 450, just to kind of put a nice round number on it. If you break below the 50-week moving average at 485. Now you're going to say, well, why not add some fibs? We could, but again, it's going to get really messy. So if you want to add fibs, go right ahead. I don't want to take too much time. I know that's not something a lot of people really care to do, is spend too much time on this stuff, but so I try to cut these things down, but there's a lot of things to discuss, I think. So yeah, I think you're going to come in. I think you're going to come in near about 450, give or take. You could argue over a point or two here or there, but the next big level down from 480. Well, we'll call it, what's that level there on the 50? 485. We'll round it off to. So you're looking at what, 35 points? It's about 500. So yeah, you're looking at that point, it's going to be another 6-7%, sort of like a little bit more than Qs, but not too much more, right? If there is a really big break, if there's a really big break. Otherwise, right, you're going to maybe have to look at fibs for anything that could fall between, to say, is there a fib laying here? And could that fib, really create something? I think it's kind of a no man's land. I'm sure you'll find a flat line here or there if you want to get into the more granular daily and things like that. You'll be able to add some, but I feel like there's just not a lot of stout support on the way below here towards here, in that range. So the overshoot to me would be at 433, like where you actually get really close to the 100. I would think I think that's going to be probably 450-ish. Like I said, I keep coming back to where this price action and how it was respected. So I think I'd rely on that more than just the SMA myself, but we'll see. Um, let's take a look at the diamonds, and I've got to look at those. We'll look at IWM. But yeah, I mean, I don't know if I don't think a lot of you trade all these. I don't want to maybe belabor these as much. We'll just go into, I know the other ones are probably more impactful, more meaningful. But you can see there's a long-term support line we have in there in white. That was right above the 200 in purple. I've got this new line added here. I think I cleaned this line up a little bit so that we could see where this thing could maybe bust up to. And that's going to come right in line with the declining 20, depending on how high it gets. And if it gets up to there already and through, great. But you've got that nice little sort of zone right there where there's a lot of different factors and so on and so forth coming in. So that's 436. That's about what? That's about 2%, another 2%. Tough to really run the fib the same way here because you have the high really back here. And this low here is probably more uh, lower low even. So that's kind of interesting in and of itself. But what we could do, probably need to take this high and pull it back to here. And we'll just see if there's any, again, we'll just see if there's any confluence that really puts us right there. And at properties, the low there is 421.98. So we can just add an 8, and then the high on that is a little bit lower of a high than the prior one, but 450.36, just so our numbers are accurate. And yeah, that's interesting too. So that's a good kind of like, I think that's was worth it, because I think, again, on the 50%, that's putting you right there. I would think that's going to be probably going to be where they try to work this back up if the relief rally is able to develop a little bit. And then, of course, we always have to do the go from there. What do we do from there? Well, we got to wait and see what it's able to do. But I think, remember, with all these SMAs rolling over, it shouldn't really be a walk in the park just to mark this right back up. Can't rule it out. You don't know what news is coming, and you don't know what animal spirits are still out there and all that kind of thing, the FOMOing, but really, this should have a little bit of stopping power, I think. There's a lot of things right near there at that level, at that 435-ish, 436 level. So if they're able to do more than that, good for them. We'll do another quick look on the downside this way, right? If we see, I think you have to go with that 50 week. right there. The 50 weeks, probably your level. I think there's a flat line at four. We're going to ballpark it at about 418-ish. You could argue it's a little bit lower, but I would say right around 418. And then your next big deal is here, right? Your next big deal really is that weekly 50-week moving average, which is 415. So not too much lower than that. And then your next level is sort of flatline-ish, kind of the makings of a flat line are right about there at 407. And then your next one down is going to probably have to be somewhere right about that's probably pretty close right there at 401. So there's a couple more levels you can throw out there, and you really don't want to even contemplate more than that. If you're in any service I can help out in, and you want some more levels, I'll get to them as soon as I have a chance if I'm super busy. If you can always come into the forum and say, where do you think where do you think some of the next levels are we could tick off? I'd be happy to do that for anybody. IWM, let's look at that one. And IWM is clearly leading the way in terms of just being a disappointment. It's been a disappointment. It started looking like it might do something a while back after the election, and then it's just been a great, great disappointment. So it's on the ropes. Let's go back to the daily on that one. You could see that it's below our lower Bollinger even. And again, I run my Bollingers off of the 100 SMA spine. That's why that's dashed. That white SMA is dashed that way, just to remind everybody that that's also the setting for the Bollinger. So yeah, this thing's pretty beaten up right to the downside. You've got an RSI reading below 30 for folks that love to get that, love to click off that it's technically legitimately oversold. Again, I would think there's at least an attempt at this point with this kind of carnage, this kind of sort of depth of selling, breadth of selling, that they try to work this thing back up. It runs into the same trouble the other ones will, in theory, with declining SMAs getting in the way and former support now potentially acting as resistance. So I think this thing probably goes up 2% as well, roughly, and then it starts having trouble near the 210. Yeah, I guess that is about 2%, right? So yeah, it starts hitting trouble there, but the next big level up from there is probably got to be you're probably going to have to go with where the 15 SMA would come in near. That would probably be near 215. 214, 215 is probably where I'd ballpark the next level up for that. And then above there, you're going to have the 20 and 200 with confluence. So you probably should be looking at that seems like it's near about 218. But I'd be surprised if it's able to do that given what's going on, but all around. But you just never know, right? It could. It's cratered so bad that a strong bounce, technically only, I think, would be. It could happen. I mean, it certainly could happen. So that is really that. Yeah, tough to really. And this is kind of what I mean, by the way, with we're talking about a second leg. This kind of started its problematic journey really before the rest of the market. And it's developed this second leg lower. And that's kind of what I'm concerned about in terms of still here in this market, that we could get a second leg lower. This has only been the first leg in my book. So if they do put a bounce together and then you start rolling over again, you could have a whole nother leg, maybe somewhere on the order of this, which would give you a much more serious correction. But what I wanted to do, I'll go back to IWM real quick, and then we'll wrap up on that. So let me just get a fib overlay for everybody, and then we'll do that, and then we'll move on to this is our recent highest high where they failed to really do much with it, and then we'll take it down to here, and we'll see where things dovetail on that. And that high there is 230.70. And then the low is what? 201, what? 201.73. Right. And let's see. Yeah. This is kind again, it's sort of no man's landish You might get a little bit of help from a fib up there near that where the 15 in red, the light blue 20, the 200, that's somewhere near that 218. It's a little bit in front of there, but nothing's really dovetailing perfectly. Even the 61.8 retracement's a little bit higher than 218-ish and where these are right now. A little bit, not too much, but a little bit. But yeah, this probably is your probably going to be hard, right, to do much more than that. Although it has been a significant slide, probably going to be hard to do that with the way this thing's shaping up. But we also don't know, right? This is why you can't be, I think, completely sure because you just don't know what news is lurking. What I want to do though now is flash um, these bigger stocks. Apple, you can see, has held up really well. That's interesting, but they've held up really well. Let's look at Google. It was smoke, but it's trying to do better. That's, I think, trying to get somewhere. But it's a great example, really, to show if you're new, right, how the SMAs can sort of keep things tamped down, right? It got back through the declining 10 there in white, but on these 150 in rust and the purple 200, and there's still the declining red 15 right there. It's had trouble for days and days and days, right, doing that. So it just kind of shows you those bigger SMAs do at least provide temporary resistance when you drop below them quite often. So Google, what's we have to say, Apple held up, Google was smoked, but then if you keep going, right, you had Meta smoked, you have Microsoft smoked, bad, right? These are bad. You had NVIDIA, oops, NVIDIA smoked lower. I mean, that's a really significant drop right there. Let's see, Tesla, this has gotten clobbered. Tesla's just absolutely gotten clobbered. Netflix has gotten clobbered pretty bad. Even formerly impervious Costco, clobbered. Formerly impervious Walmart, clobbered. Some of this big stuff has really gotten clobbered. So not to say that it can't get clobbered more, but this has been a real selling. This isn't like they didn't come for anything. They came for a lot of things. A lot of things that were even doing very well, like Meta, like Costco, things that were already struggling got worse, like Microsoft. So it is what it is. So for anyone that says, well, there's way more damage that has to happen. There could be. I don't disagree that you might need more damage that has to happen. It's just that I don't want to appreciate how much rough stuff's already happened. And what we should go into too is to look at just, I did mention the VIX, so we'll cover that quickly. This hesitated here at this level. That's funny that my lines, oh, there they are. It just took a while to get there. Yeah, I kind of like leave these up here because they're just general, sort of like I said, sort of like almost like tranches where it kind of gets stuck near there a lot. And once you get through there, you'll really rise up into, it's like I said, mid 30s. But they haven't let that happen so far. They put a pretty good defense up late week, so that's good. As I noted, I'm going to bring it up right now just to make this clear. Let's see. TNX, right? The yield, the 10-year yield. Well, why didn't it switch over to that? TNX CGI. Look at that. Yields moved back up, right? So I'm thinking maybe some money rotated there, right, out of this defensive kind of positioning and decided with some of those stocks that we just showed being uh, so smoked, right, that there may be some money left and went into those. Let's see, and then let's go to the dollar. The dollar has been just crushed. So this might help in some ways, right? But with all these trade problems going on, it's not the easy answer, that it usually is. So maybe this is weaker dollar good, right, for exporters, blah blah blah, repatriating blah blah profits, blah 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 blah. But that's really one of the worst weeks we've seen for the dollar in some time. We could go back and see on a weekly basis in the last 5 years if there's been any weekly candles that are worse than that one. And this one back in here is on par, right? That's somewhere in the same neighborhood. So, but it's you can see that last week was probably one of the worst weeks in the last 5 years for the dollar. So, uh, that's volatile. That's important volatility, right? Yields sort of bouncing strongly. It's volatile times. What's been happening here in the VIX is at least temporarily arrested. But if it does bust through, and gets up to the 35 level, that's interesting. That would be very interesting. I don't think it's over. I did see more VIX UOA this week. I've been very disappointed by the fact that apparently there's still just not a lot of major index ETF hedging. I don't see a lot of hedging happening in SPYs, Qs, and so on. I don't even see that much happening in these sector ETFs. So I don't know. I don't know if people have moved their focus to being long VIX calls or call spreads or things like that for hedging instead, or maybe it's just not being taken seriously enough. I really hope people are taking it seriously enough because that'll help us get to at least a tradable bottom that lasts for more than a few days sooner, right? If the risk is being taken more seriously. If it's not, the market usually ultimately forces people to take the risk seriously, more seriously than they care to. But so those are some of the other highlights of our comments. I do think the market has really taken a turn, and if this month ends poorly from here, in other words, they can't really march back too much. You end towards even these lows, not good. I think that's going to shift the charts kind of in a more bearish light for a little while. Let me see. I wanted to get our sectors up here to at least pull those in for a quick look. And uh, the sectors, as you can see, right, it's pretty much just still been the whole risk off affair to this point. Now, there are signs, right? We had some good candles here and there on Friday, maybe a good candle here and there on Thursday and Friday in some areas. But overall, as you can see, everything's pretty much still in a risk off mode. They're not letting staples go that much. They're not letting healthcare go that much. Real estate is not being let go that much. So a lot of these are viewed as defensive positioning. Um, your XTN has just been smoked. I'll enlarge that a little bit. You can see how bad that's gotten. I think that's a bad sign. Your financials cracking to the extent that they did. I think that's typically a bad sign. Energy, right? Falling apart. Not a good sign typically in terms of energy demand. Even utilities, they did bounce on Friday, but even utilities, which have been a darling, right, for the reasons we've discussed many times, that are kind of newer views on utilities rather than the old school view. Those were also not really faring well. You did have a little stability in XLI, XLB, so that's again the Dow being the Dow, I think, to a degree. But yeah, I mean, discretionary got smoked again, despite Friday's nice little save. You did get that gap closure. I think we talked about that a while ago. That again, when you start heading back in that direction, and there's a good story behind the situation, which is right this disruption that's happening, with the in Washington. That's the kind of thing that can create this kind of a problem we're, I think, in now, and it can lead to the kind of selling we've seen. And it might be a good thing in the end, but that remains to be seen. But in the short term, again, like we've been saying, I think you get the turmoil that people maybe were not expecting. There was a lot of bullish expectations and so on and so forth, and maybe they're not getting the entree they ordered at least yet. And I guess, as I said, not passing judgment. I'm just saying that could be a good thing. Maybe not. We'll see. Hopefully it is. But yeah, this is creating. To me, that's what's creating the problem. That's why I don't think it's a genius commentary. I just wanted to make it clear why I think you're getting kind of like getting that driving force and kind of what if it all well I kind of explained last week why it all makes sense to me just based on the way the markets operate. Not really if you liked it or you don't like it or whatever. More, or even I like it or don't like it. More just that's the way the markets operate. But here's XAU. We did have a little bit of paper. This sector, notorious. Just want to mention this though, because it might be worth watching if and only if it starts to work its way up a little bit. Because you do have this nice little base camp built in here. You're not making this run back towards the high, recent high here, from this sort of subdued lower level all the way into here. You had this nice, relatively garden variety corrective activity phase. You have a nice little pop once that resolves itself. You come back and you find your support right on the SMAs where a bull would hope that their equity, or in this case this index, would find support. And now you have this higher base camp to maybe challenge this high right here. So I did put one idea in on this. This is a tough space to trade historically. I won't kid anyone that's new. I just think that bears watching. And I think a lot of stocks really are due for some sort of a bounce. I'll just show the market breadth very quickly and we'll wrap up, because the market breadth screen that I usually go with is right here. And this is, you could see here that again, they sort of finished the week in a little bit better shape, a little bit better shape. I'll put the SPY up there just so everybody has the right. It doesn't change the data. It just kind of gives you that against the market better than XAU. So you can see that it's still all the same data, but you're getting a little, right. Your new lows are sort of not as bad. You might have had this real serious new low development here. Maybe now things are slightly improving. And that kind of, if you think about this though, right, this sort of coincides almost with the way that yields started to lift again. So maybe, right, there is some money moving back in to the market and buying some of these so-called on sale stocks, right? Or these values or whatever you want to call them, the dip buying, whatever. And you're getting a little bit of an improvement here to end the week. Nothing great, but everything's getting just a tiny bit better to end the week. So the momentum has swung just a tad that way. So if they can, without, again, news neutral, I think they're going to try to push this up. Remember, CNN, fear, greed, that got to like right around 17 at one point. It might have been even lower intraday. I know there was a 17 print one day, it might have been Thursday, when it closed at 17. That's really quite low for the past few years at the very least. And the fear and greed is still, see, the AAI survey is still predominantly bears, something you don't see that often. So I think it was actually worse last week, but which would also kind of coincide with some people deciding it's time to buy a little bit. Very few, though. Maybe just like 3% fewer bears this week. But still, when things get that tilted and overdone and everyone's sort of feeling this way, that's when the gang usually begins to work their magic and move things against how a lot of people think it should go. Again, that's why the market can be really counterintuitive, but that's something to keep an eye on. I try to do that. So I would tell you just to be on guard for that. News, of course, could trump everything as usual, and I don't, not using that as a pun. It just, you get news stories, and a lot of the stuff that we think would normally happen may not, right? So I would think, again, normal circumstances, nothing horrendous. You do get this another rally, relief rally attempt. Last week's was very feeble. It was very fleeting. I mean, they couldn't do much. I think right here is Monday. You could see they opened things up, tried, but the SMAs, everything just kind of conspired to say, no, that's not working. And you get this strong reversal, and that's it. And that was really it. Now there were other attempts, right? They put together during the week, but none of them were really the relief rally attempt that I thought. I thought they would probably try to get up at least to towards the 20 there in light blue. They couldn't even do that. So that just told you there was more. I think right away there was more to come, and that was it. So now you're still in a similar position, but you're worse with slightly improved situation overall, and um, kind of having set maybe a short shorty trap there, and maybe they'll reverse it a little bit more. But if you notice, it's not getting these ETFs and stocks are just not getting through these SMAs, and it's taking inordinately long, and it's just not working. Right? You can't really press your bets at that point. You really have to say, like, man, okay, this is not good. The selling pressure's still there. I'm just going to maybe neutralize and I can always get back in, but it's really dangerous to get a little bit of a pop through, get comfortable, and then overstay your welcome and then not hedge, not exit. And that's why I started out sort of talking about this candle right here because these guys are cutthroat and they're always going to be cutthroat and it's always been cutthroat. So if you hold on a little too long, you could really get yourself in trouble and then you're really frustrated. If you're new, you might not know that. If you've been around, you probably know that. So yeah, that's why we're big on the discipline and just saying, okay, it's not working because remember, right, you can always get back in. That's the reminder I always try to share. You can always get back in. And if you missed out on a little bit, you missed out on a little bit. But if it turns out there's a more of a relief rally, pop, bounce, trampoline, whatever you want to call it, then maybe was expected, you can still get in and a little bit later and still hopefully benefit from it. So on that note, I'm going to wrap up. I'm going to wish everyone a wonderful conclusion to their weekend. Wish everyone a great week ahead. Hope something I share with you helps you out this upcoming week or some week in the future. And everyone take care and trade smart out there this week. Thank you.